Good afternoon and welcome to NYFP. In midday trade on this Thursday, the major U.S. stock averages are straddling the flat line. Joining me this afternoon to weigh in on central banks is Sandra Navidi of BeyondGlobal. Good afternoon, Sandra. Thanks for joining me today.
Thank you for having me, Remy.
Well, since we last spoke, the ECB cut its key interest rate by 25 basis points. Now, earlier today, we heard from the Bundesbank's Friedman, and he did say that there is more room for another rate cut. Now, given that we've seen so much mixed economic data, what is your outlook for the ECB?
While the economy stays weak and uncertain, it's unlikely that the ECB will change its current stance. However, I don't think that another rate cut is imminent.
And in terms of the latest fundamentals coming out from the Eurozone, we did see German industrial production as well as factory orders come in better than expected. And also earlier this week, the Eurozone PMI composite as well as individual PMI factors did come in above expectations. But we have to keep in mind that unemployment remains at record highs, and the latest retail sales figures are also weaker than expected. So where do you see the strengths and the weaknesses?
Of the Eurozone or the ECB? Well, I think the weaknesses are fairly obvious. It's continued unemployment, it's a lack in demand, it's this, there's an argument right now between austerity and growth measures. What should we put more emphasis on? And I think clearly we still need structural reforms, particularly to combat unemployment, and growth measures, more investment and innovation.
And Sandra, now that we've covered the Eurozone, I do want to switch our focus on over to the U.S. At the latest Fed meeting, we didn't get a change in terms of the stimulus measures, but we did see a little change in the language in the statement that was issued after the rate announcement, and that was that the FOMC may reduce or increase its purchases based on what we see in the economy. But do you think the fiscal policy is hindering growth?
I think that monetary policy has reached its limits. There's not much more that it can do, and it intended to serve as a bridge for politics to come up with more fiscal measures, and so far we haven't seen enough because there's a political deadlock.
And last but not least, before we wrap it up for today's interview, I do want to ask you about the G7 meeting. Now, we will see finance ministers from the G7 nations meeting in England starting on Friday until May 11th. But given that it is an informal gathering, can we expect anything of importance to come out of that?
I don't think there'll be any fundamental changes, but again, I think what's going to be really interesting is to see if those people who are more in favor of stimulus versus austerity, if they gain more traction. I think in view of the weak economic situation, that is not unlikely. So we have to look out for any concrete decisions to come out of that meeting to spur growth.
And Sandra, I'm sure we'll be keeping an eye on any comments that come from the G7 meeting. So thank you so much for weighing in on central banks, and thanks for all your analysis.
Thank you for having me, Remy.